Good morning. Welcome to the trade setup. It's more of a continuation, I would have to say, of what's happened the whole of last week. And the last week wasn't the most pleasant for India. But remember, it's an interesting week because it's also an earnings heavy week, not just in India, but the rest of the world as well. So lots to talk about. First, the key global news. There's a lot of chatter around the EU ban on Russian oil. For now, it is still stalled by Hungarian demands. So that is one thing that you have to keep in mind in the session today. That is one. Chinese premier has warned of a complicated and a grave employment situation. So if you're talking about the US at one end, wherein people have jobs and don't want them, in China, the other thing is turning out to be true, wherein there is a situation or a sticky situation and a complicated and a grave employment situation at China. So quite the other end for the two superpowers in the world. Asian stocks and US futures are down in early trade, so we're likely to start off lower yet again. And in the sign of a bit of a risk off, Bitcoin is down too, down up below $35,000. Oil is steady, and the US 10-year yields are the highest since 2018. So not the most amazing combination for people who are invested in markets per se. Remember, as I said, the futures are down, Asia is down, the US markets themselves didn't end very well in Friday's trade either. So a bit of a downtick out there and the continuation of a fall, if you will. And as I said, the futures are not looking all that great. This is SGX Nifty, of course, which hints at a start, which is around 16,227. Think about it, viewers. All key supports are steadily getting broken. So per se, at some point of time, some support will find a bounce back. Now, you can argue when that happens that, oh, it did happen, but for now, I don't think supports really hold as much of a meaning to my mind, really. It wasn't the best of days, by the way, in Friday's session as well for our markets. And in the last half an hour, 1 hour, the markets really came off, and which shows in the way some of the stocks corrected. Look at the kind of cracks that came into strong stocks like Angel One or Avenue Supermars. There was an ugly rumor around the promoter entity, or Gujarat Alkalis 6.72, or Voltas 7.6%. Versus that, there were a few that stood out. NHPC was probably one standout name out there. And then there were some smaller names like FACT or TTML or VTL, etc. But really, it wasn't as much about a day of gainers as it was about the kind of losses that came in to the losers. So what's the trade? And remember, FI sold about 5,000 crores in the session, Friday's session as well. So what's the trade setup like? I think the outperformance that Indian markets had until now for the against the world market seems to be wilting now, and Indian markets starkly underperformed major markets the whole of last week. And while it's not a leverage long market though, I do think that there are some quant indicators which are indicating that now going naked short, blatant short, may not necessarily work out, at least at the index-wide level. Short, stock-specific shorts, stock-specific longs could work out and do work out every single day. So there's nothing new that I'm saying. Just that from an index perspective, you want to necessarily go out and naked short the markets. Today, well, we'll start off lower. Is it pricing in the US futures downtick as well? And what if the US markets do change course a little bit? All of that are imponderables, really. But the risk reward turning slightly iffy, even for a naked short position. It was great until now. I mean, we've been talking about how people should not take leverage longs. People could have taken leverage shorts. I think we're now in a bit of danger zone, even if you go out and do a naked short. Don't know how juicy the risk reward is. That's the limited point. Reliance may stay under pressure today, and that might put pressure on the index as well and impact the oil and gas index, which hitherto has not been doing all that poorly. So keep that at the back of your mind. And of course, pipes companies' results and expansion plans to be monitored carefully. I'm just saying it's a very small segment, but just purely on the back of the numbers, I thought that is looking very, very included. Okay, so that's the long and short of what the trade setup is looking like. There are some key results today include UPL, SRF, Dalmia Bharat, BASF India, or KEI, or RT Drugs. So some key numbers to be watched out for today from the large ones, really. The top three, which is UPL, SRF, as well as Dalmia Bharat. What are the stocks to monitor in the session today? Firstly, MINDTREE and LTI. The board has approved the merger of MINDTREE and LTI. The boards rather have approved the merger of MINDTREE and LTI, respective boards. 73 shares of L&T Infotech for every 100 shares, equity shares of MINDTREE. So the much spoken about merger happens. It creates a behemoth, which is great. The question is, what is in it near term for shareholders? So one, remember viewers, there's hardly any kind of difference in the swap which leads you to buy one and sell the other. So, and whatever 0.5% difference is there, that will get negated on open. So no arbitrage that you gain from this. So keep that at the back of your mind. Now, what is NOMURA saying about the merger? I mean, I thought their note was pretty interesting and more pertinent, so bringing that. They say that the combined entity with $3.5 billion would be a formidable Indian IT services company and would find an entry into the big boys club. They are saying it's too early to gauge cost synergies, and they believe there will be a rise in attrition in both the companies due to the uncertainties surrounding the merger, and that would be a key monitorable. Well, due to personal reasons, Sanjay Jalona, the man who led LTI all these years and did a great job out of it, is already moved out. So you know what could happen, right? I mean, there could be some key people that could leave along with Sanjay Jalona as well. Who knows what happens next? Does he go to some other IT firm, global or local in nature? All imponderables. But that's why there are some issues. You would probably suspect that LTI per se might have more issues than the other, but the stock prices are now joined at the hip, right? So technically nothing happens there. So um, it's a medium term positive. For the short term, there are some uncertainties. That's how I would leave it when it comes to LTI Mindtree. It does create a great formidable entity from a medium term perspective. So keep that at the back of your mind. Reliance Industries was the other set that now talking about results. Start off with Reliance Industries and what Jefferies has to say. So they maintain a buy, the target price of 2950. They said that refining looked strong in calendar year 22 as well on geopolitical developments, while petchem could be soft on weak Chinese demand. Earnings boosted by energy inflation. They say that Reliance could act as a safe haven in today's context despite its elevated capex. They've raised their FY23 O2C EBITDA by 18% to factor in unprecedented strength in the refining business. So net, a lot of focus this time around from a lot of brokerages on the O2C business simply because of what's happening in the energy space. And that tells you a thing or two about how the world is viewing stocks from a different prism. NASDAQ and tech stocks are getting butchered, whereas refining and oil and gas are actually staying steady. Think about it, viewers. Much as people like to hate upstream oil, Oil India or ONGC are steady at the levels that they were at, whereas the tech companies have corrected anywhere between 25% to 40%. In India, I'm talking about, right? Or let's say 40% is in hyperbole, but between 15% to 30%, you would agree. So think about it. You don't have to be married to a stock. I mean, that's the limited point. Tata Power numbers came out as well. Revenues at about 11,959 crores. The estimates were 11,515, largely in line. EBITDA slightly higher than estimated, 1,868 crores versus 1,805. EBITDA margin is at 15.62 versus the estimates of 15.67%, so largely in line. And the net profit at 503 crores versus the estimates of 453 crores. The numbers seem optically in line or maybe marginally better than what Bloomberg estimates were. However, the CLSA note is interesting. They have a sell with a target price of 212. They say that the coal business disappointed again because the Indonesian coal volume and averages selling price were down about quarter on quarter, which is a problem. The weak Q4 was pepped up by tax break on the CGPL merger, but it remains expensive. Tata Power at 24 times FY24 CLSA EPS estimates. They believe war-led commodity spikes and a retail frenzy at any point of time might provide an exit opportunity, or is providing an exit opportunity, if you will. Do watch out for Tata Power in case it has a negative reaction, and maybe the market-wide reaction, but if it's an exaggerated negative reaction, then you know why this could be happening. Remember, spec chem stocks led the fall, so to say, in Friday's session as well, or Thursday and Friday, and NAVIN Fluorine came out with numbers, which you have to admit, compared to what disappointments have come about across companies, this one seemed to be doing reasonably okay. Net profit was up, revenue was up, EBITDA was up, margins slightly lower, but nothing too dramatic. 250 basis points for a spec chem company is large, but still nothing too dramatic. And that's the point. Maybe it did slightly better then. So the fluorination companies anyways tend to do slightly better pricing power, etc. So yeah, that's good news. Okay, we've got a few viewer queries. We'll try and take them towards the end of this as well. Some key mid-cap earnings. Let me just done with the trade setup and the earnings roundup, please. So firstly, some key mid-cap earnings on the banking side. I'm ignoring Can Bank, but DCB and Federal Bank. For DCB, credit growth improved 400 basis points. Asset quality showed 40 basis points improvement as well, or a correction. So that's good news. Federal Bank, the accelerated provisioning caused significant dent in the PPOP in Q4. So maybe a negative reaction there. Some decent numbers for companies like Seshasai Paper, Ponni Road, as well as Siaram Silk Mills. So those were a couple of good ones. So do watch out for that. From other action, and viewers, remember even no, even fact or fertilizers and chemicals Travancore had a fairly decent set of numbers. So maybe that is something you got to watch out for. A green panel had a fairly decent set of numbers. So all of these, and Vesuvius had a fairly decent set of numbers. So those are a few that you might want to watch out for on the good numbers side. By the way, just hang on. I mean, I'll actually tell you if there were some weak numbers aside of Tata Power. Apollo Tricord was slightly weak. Bajaj Consumer Care was slightly weak. So those are a couple of things that may react poorly on the numbers. Now, M&M has said that the companies, I mean, they clarified that there is no plan to split up the auto business into 3 units in response to media reports. This is something that came about, I think, in Thursday's session. So Mahindra and Mahindra is saying that, just get that, that there is no plan to split this. So interesting. Well, it's not necessarily a positive. And some stock in focus include an Apollo Pipes, wherein the con call had some fairly strong outlook. Bombay Stock Exchange, because of the strong results from NSE, could there be a rub-off effect? Remains to be seen. And a couple of stocks for which I haven't given any lines, but just hear me out on those. One of them is HAL. Now, HAL is typically great, but there is some media reports about how IAF's 35,000 crore plan to upgrade the Su-30 fighters fleet has been put on hold. It was being done in collaboration with Russian Defense and HAL. And now, because of this ongoing geopolitical situation, HAL loses out on this upgradation plan. So maybe that's a negative. And the casualty of the day could well be Indostar, because there's some additional provisioning that the company will have to do based on some guidelines, some 550, 600 crores, which would be a big dent. I wouldn't be surprised if Indostar has a very, very large opening bar in the session today. So do watch out for this one as well. There is a query. Let me try and see. So it says views on Mirza International. Well, apologies, but I haven't looked at the results or the fundamentals of that company in any fashion. So whether or not you should go long is not something I'll be able to unfortunately answer today. Maybe with a guest at some point of time, but unfortunately, my friend, not today. Anyways, I can't recommend, but I could at least tell you if the results were strong or if the valuations were good or bad. Unfortunately, I don't have that insight today, so apologies for that. What I do leave viewers with is an interesting thought, and it stood out for me. Usually I bring about some news bits, but I think this piece or this line, it says that the desire to perform all the time in the stock markets is usually a barrier to performing over time. Think about it. You don't have to trade every day. You don't have to make money every single day. You have to let your portfolio do the talking over a period of time. Try and think that, and don't be a compulsive trader, especially in these times. Buying every dip may not necessarily be the best idea. To consult some advisors before you try to do that. Anyways, for people who tuned in here, still the quant indicators, I don't have particular insights, but quant indicators that I look at, technical experts that I talk to, including Dr. C. Narayan, etc. Summation of all of those thoughts is that still not the time to go naked long, but maybe the risk reward for naked shorts is also coming off a little bit. So keep that at the back of your mind. Look out for some of the result reactions. Some may react very negatively because the market is also looking slightly weak. So keep that at the back of your mind as you trade today. Stay safe and have a good day.